The SPDR Portfolio Emerging Markets ETF, SPEM, is an exchange-traded fund, ETF, that provides investors with exposure to the emerging markets equity markets. The fund is managed by State Street Global Advisors and is traded on the New York Stock Exchange, NYSE, under the ticker symbol SPEM. The fund seeks to provide investment results that, before fees and expenses, correspond to the total return performance of the S&P Emerging Markets BMI Index. The index is a market capitalization weighted index that is designed to measure the performance of large and mid-cap companies in the emerging markets. The index includes companies from a variety of sectors in countries, including China, Brazil, Russia, India, and South Africa. One of the key advantages of investing in an ETF like SPEM is diversification. By investing in a fund that holds a basket of different stocks from a variety of sectors and countries, investors can reduce the risk associated with investing in a single stock or country. This is particularly important when investing in emerging markets, as these markets can be more volatile and risky than developed markets. The fund's expense ratio is 0.11%, which is considered low for an ETF. This means that the fund has a relatively low cost for investors, as the expense ratio is the annual fee that is charged by the fund to cover its operating expenses. Additionally, the fund is relatively liquid with high trading volume, making it easy to buy and sell shares of the fund on the NYSE. It also gives a good exposure to emerging markets, with the fund's holdings spanning across different countries and sectors, making the index well diversified. However, investing in emerging markets also comes with certain risks. For example, emerging markets can be more susceptible to political and economic instability than developed markets, which can negatively impact the performance of the fund. Additionally, some emerging markets have weak legal and regulatory frameworks, which can make it difficult for investors to protect their rights and for companies to operate. It is important to note that investing in emerging markets can be riskier than investing in developed markets, and investors should be aware of the risks associated with emerging markets before investing. It's always recommended to consult with a financial advisor to determine if an emerging markets ETF like SPEM is suitable for your investment portfolio. In conclusion, the SPDR Portfolio Emerging Markets ETF, SPEM, provides investors with an easy and convenient way to gain exposure to the emerging markets equity markets. The fund's diversified portfolio, low expense ratio, and high liquidity make it a solid option for investors looking to gain exposure to the emerging markets. However, investors should be aware of the risks associated with emerging markets and should consult with a financial advisor before investing.